This is Mark Carrington from GoForForexProfits.com. This is the first in a series of videos about Harmonic Scanner setups. Harmonic scanning was developed by Scott Carney, and this last week I signed up for the Harmonic scanning service from iMarketsLive. And I'm going to go through the first trade setup. A little bit of background is I've been trading Forex for close to 4 years now, or 3.5 years now. Most of my trading strategies have been trend trading, so trend trading off a trend line or off a moving average, so bouncing off a moving average. This is my first exploration into pattern trading. Harmonic scanning is all about identifying patterns that repeat and strongly driven off Fibonacci levels. So we'll see, for example, on the chart here, this pattern here, this is a pound US Aussie dollar. It's called a shark. So price has risen to a level. It's done a retracement to about a 0.382 Fibonacci level. It's then extended past there and then done the reversal, and it's the extent of this reversal that creates the opportunity. Now the software produces signals for different types of patterns in different time frames. So we'll see here that we've got hours, days, and 4-hourly. One can explore them on smaller time frames, but this particular configuration is for those 3 time frames, so daily, 4-hourly, and hourly. And what it does is it creates a price entry zone, suggested entry prices, a stop loss which will be down here, and then the suggested target prices, broken at 3 different levels of target. Now my little notepad here is it hides where the price has actually got to, and I want to go through the process of identifying when to trade. And so basically this is where I was at the time I first looked at this opportunity. So the signal had come out once this pattern had finished forming, which would be over here. I saw the signal 1, 2, 3, 4, 5 hours after it. So it had been in place for 5 hours. And this is ultimately the art of harmonic trading, is to identify the right price action to enter the trade. And as it happens, we're looking for a clear sign of reversal, and as it happens is there had already been a reversal here, and this reversal is we've got price forming there, so making a lower low and a lower high, and then we've got a new price here, and this is what we call a ring low. So we have there a ring low. So in fact there was a price signal already in place. And then what had happened is that the price had retracted from this, and it actually created a ring high over here. So there was still a trade opportunity because the price is still inside that price zone. Okay, I'll move the box across to the next bar, because this is when I got quite excited, because what I started to see is, and I'm going to draw the bar in that we had. So we had this ring high situation, so that I'm talking about this one here. And what I saw was price did this, and then the minute it did that, I put my order in up above there, because what this is the second form of price reversal that I am interested in. It's called a bullish engulfing bar. I'm interested only if this thing was triggered inside that hour of trade, and so that gives me a bullish engulfing. So we've got 2 patterns that we're interested in a ring low, we're interested in a bullish engulfing bar, so it starts out here and goes up like there. And we're also then be interested in any price that, which is the third one for completeness, is when the price opens here, goes down and goes up and finishes at about the same level. So we call this a low test bar, so it's got a long tail, sometimes called a long tail. So that's where I got interested in this particular trade, because this was starting to form a bullish engulfing bar. So if I move my pad across, we were talking about this bar here. So it opened out here, and then it gave me an entry above here. So I'm in the price zone, because we must enter here, and the stop loss is further down. The stop loss is actually just underneath this here. It's hidden by RSI. Now the reason I put the RSI on the chart is that this is ultimately why I took the trade, is the pattern is formed. But what I particularly like is we see here we've got a series of lower lows, and we have on RSI, which is the relative strength index, we have a series of higher lows. So we've got divergence here. And that's what made me interested in the trade. So there are two parts that are important. Is the pattern was complete. Probably three parts. We had the right sort of price action. There's correct price action there. And as it happens, you could have entered here, because that is also a ring low, although a ring low in the middle of a range is not that important. But here's another engulfing bar, so one could really have entered here, although that is now entry outside of the price entry zone, even though price had started in the price entry zone. The pattern is one reason to take the trade, the divergence is the other reason to take the trade, and then the last point you really got to concern yourself with is what should trade size be. And as it happens here, what I did is that the real problem I have, the real challenge I have, is this is the daily chart for the pound Aussie, and you can see that it's been in a very firm downtrend, and then it's broken even more aggressively downwards. This is on the back of the Brexit discussions. So I'm going to draw a trend line in here, and to show you why there are other ways to have identified the trade possibility. So basically, once we've broken out of this channel, we know firmly that it's in a strong downtrend, so I can draw this new trend line in here, and I've joined the tops, as many tops as I can, and we can see what's happened here is price has broken out above the trend line and is now heading up. And we have divergence here. This indicator here is MACD. We have divergence here. So this is telling me that there's a possibility that there's a reversal coming, even though this is seriously negative. This is the MACD. This is the negative line. This is bear country. And that ultimately tells me two things. One is to reduce my trade size because it is bearish and I'm actually trading against the trend. The second thing it tells me is to be cautious about how I manage my trade. And I'm probably super cautious, because if we go back to looking at this here, is what I actually did is once price broke clear of this level here, once it broke clear of this level here, so we've now got support from here, is I moved my stop loss up to here, up underneath here. So I was 5 pips underneath this new support level. Unfortunately, I did not take my trade off, but that did mean that given that I'd entered here, I was and my stop loss might have been a bit higher than that, because I was actually profitable. is I entered here. So I entered above this bar here. That's my entry. And then once I had fully cleared this stuff here, my stop loss moved up to about there. And then the trade went back and pulled back underneath there and stopped me out, but for a small profit. Ideally, I would have been better off taking half the trade off and then moving my stop loss to break even. That's just a trading strategy. But in terms of the harmonic scanning rules, no need to do that. You can leave the stop loss here until such time as we've reached this target level, and then once you reach that target level, take half the trade off or a third of the trade off, whatever your rules are, and then move the stop loss to break even, and then aim for this one and aim for the next one. So that's my first trade, a profitable trade, maybe not as profitable as it could have been, because my trade management was a little bit different, and it was late at night and I didn't want to spend the whole night sitting there watching the trade. So that's a first in a series. Happy trading, and may the harmonics work for you.